Picture this. We're standing right at the edge of the biggest money move in modern times. I'm talking about trillions of dollars, not millions, not billions, but trillions that have been sitting for decades in boring stuff like bonds, government money, retirement accounts, and old-school stocks owned by older people. And that money is now starting to move. Not slowly, not carefully. This change is speeding up and going into the hands of younger people, the ones in their 20s and 30s, the people creating cool new things, building tomorrow, and putting money into exciting stuff like crypto, smart computers, and future technology. This is not money advice, but here's what's going on. Tom Lee has been pointing out something most people still can't see. The people who manage money and baby boomers who own most of the world's money are already starting to give that money to younger people. And history shows us something clear. When young people get control of money, they don't keep buying the same boring bonds or old safe stocks. They go after the future. They go after new ideas. They put money where things are growing. And right now, that means crypto projects, smart computer companies, and companies that change everything. Think about it. This same thing has happened every time a new group grows up. When baby boomers started working, store stocks and suburb building went crazy. When the internet came along, it created the biggest money-making time in tech history. And today, the exact same energy is about to pour directly into digital money and smart computers. The wave of people is unstoppable. And this wave doesn't just make small ripples. It crashes onto the beach with unstoppable power. That's why I made something that will change how you look at your money forever. It's called the Ultimate Millionaire Investor Guide. Find 100x stocks, and it's packed with everything you need. Papers, pictures, videos, and deep research designed to help you find the kinds of things that can actually multiply your money when this wave of trillions hits. The link is pinned in the comment below this video. And trust me, you'll be sorry you missed it when you see where this ride goes. And as a bonus, don't leave free money sitting there. Use my Robinhood link in the description. You can get free NVIDIA stock up to $200 with just a $1 deposit. Now, let's dig deeper into why this change is so historic. We're officially in the early stages of a bull market, and you need to understand what that really means. Tom Lee broke it down like this. If you've had 2 years in a row of 20% gains, and then the third year is already up another 10 to 15%, history tells you one thing. This is a bull market. Period. Bad markets don't work this way. Fake bounces don't last 36 months. This is proof, not guessing. So why do people hate this rally so much? Simple. People panic sold at the bottom. They listened to smart people warning about a 60% chance of bad times, dumped their stuff, and sat holding cash waiting for a drop that never came. The market shot up too fast, and now they can't get back in. That's how a hated rally works. The crowd misses it, then tries to make themselves feel better by calling it dumb regular people buying. But here's the truth. Those so-called dumb buyers have been the ones catching Tesla, Palantir, Netflix, and all the other regular person-driven winners before big companies ever woke up. Remember when Tesla first tried to get big company attention? A hedge fund literally had to hire a research company from Oregon to write the first serious report. That's how late the big money was. And the same thing is happening now. Big companies aren't leading, they're chasing. And that's why regular people, younger investors, and crypto users are far ahead of everyone else. Now, think about what the market has survived over the last 5 years. Any one of these things should have been a kill shot for the bull market. The fastest price increases in history, the fastest Fed rate increases in history, a worldwide sickness that shut down everything. The tariff shocks, every single one of those things should have ended the bull run or at least crushed the economy. Yet here we are. Company earnings kept growing. The market kept surviving. The so-called kill shot missed every time. If this were actually a weak market, it would be dead. Instead, it's stronger, cheaper, and tougher than before. Let me put this in simple terms. If a stock got hit with 6 kill shots in 5 years, but kept growing earnings every single year, you wouldn't just call that a survivor. You'd call it unstoppable, and the PE ratio lower today than before. That means the market is cheaper, not more expensive. This is where wealth gets built when negative thinking blinds most people, but the real numbers quietly keep getting better. Now, let's add smart computers into the picture. This is not some temporary tech hype story. Smart computers are the industrial revolution of our time, only faster, deeper, and more worldwide. Every business cycle throughout history has had its driving force. People in the 80s, the internet in the 90s, mobile phones in the 2000s. But smart computers are different. Smart computers are a 24/7 work machine that doesn't rest, doesn't take vacations, doesn't need pay or benefits. It just delivers work at a tiny part of the cost. Think about what that means for companies. For a few $100s a month, they can replace entire departments, cut costs dramatically, and scale work beyond anything humans could do. That's not just being better. That's complete change. The companies that use this tech won't just beat their competitors. They'll destroy them. And the market knows it. That's why smart computer stocks say, reshooting higher, and why crypto projects tied to smart computers are getting huge attention from money flowing into the space. And here's the kicker. This smart computer revolution isn't coming. It's here. And when you pair it with the trillions of dollars about to shift into younger hands, the effect is exponential. Younger investors understand smart computers. They live digital. They own crypto. They value speed and change over slow, safe bonds. They're not waiting for Wall Street's permission. They're already building the future. We're also seeing something most people aren't paying attention to. The ISM Manufacturing Index has been below 50 for 28 straight months. That's the longest stretch since 1950. Normally, people would panic at a negative reading. But what does it really mean? It means businesses are careful, not too excited. And that's good because market cycles don't peak when fear is high. They peak when everyone is overconfident. Right now, confidence is low, business feelings are careful, and the Fed is turning friendly. Combine that with the smart computer boom, and you've got rocket fuel under this market. Just imagine where this goes when spreads on interest rates get normal. Right now, house loan rates are 7% when they should be closer to 5.8% based on old patterns. That's creating fake pressure. When that spread falls apart, credit gets easier, spending goes up, and the cycle speeds up even faster. All of this is coming together at the same time, the wealth transfer, the smart computer revolution, and the beginning of a confirmed bull market. So, here's the reality. You're not too late. You're early. Big companies are still doubtful. Smart people are still fearful. And the average person is still stuck in cash. But the future doesn't wait for permission. And markets don't give second chances. This wave is building. The energy is here. And money is already shifting. And the best part, we're only just getting started. Because once you understand what comes next, the way crypto adoption, smart computer use, and global money flows are about to crash together, you'll see why this decade could make millionaires faster than any before. When you really start to map out this change, you see something amazing. The traditional cycles we've been taught to expect, slow booms, long recessions, predictable recoveries, those aren't going to look the same anymore. Why? Because smart computers and digital money compress time. What used to take years to unfold can now happen in months, sometimes weeks. That's the true disruption here. Take productivity, for example. In the past, productivity gains were measured in single-digit percentages stretched over entire decades. Think about the assembly line. Yes, it changed manufacturing forever, but it took years to spread around the world. Now compare that to smart computer tools rolling out worldwide in less than 18 months. These aren't small improvements. This is exponential scaling of productivity, and it's unlike anything humanity has ever dealt with. That's why Tom Lee compared this moment to the Industrial Revolution. It's the same type of structural change, only the pace is amplified. Every company in every sector is under pressure right now. If they adopt, they thrive. If they hesitate, they risk becoming obsolete. And because the cost barrier to entry is so low, literally a few $100s a month, adoption is spreading faster than analysts can even measure. Now, pair this with market psychology. One of the most misunderstood forces in finance is how feelings control money flows. We've got data showing how careful businesses are, how doubtful investors remain, and how smart people still talk recession while the market quietly pushes higher. That carefulness acts like dry powder. When fear is high, Positioning is light. And when positioning is light, any up side surprise creates violent rallies.